Before I begin, I must advise that this is purely for entertainment purposes only. I am not a financial advisor and this is not financial advice. Speak with a professional and as always, conduct your own due diligence when trading. This has been a tough week, but having goals, a plan, and the need to explain my every move really made the difference in staying on target. I'll begin with the call and put positions I closed and opened. My tech conversations inspired naked call with fuel cell finally turned positive. The $7 strike was hit, and while I still had another week to see if it could go higher, I was happy with cashing out for a total of $81, netting a profit of $13. This is way above my 5% return on any trade rule, which is helping me curb my greed. I closed out my poor man's covered call with Palantir, with a strike of $30 expiring on September 24th before close of business so that I could open another position. I netted a nice $8 profit. Since I closed early, I was able to get a one-day jump on opening my next PMCC with Palantir, this time with a strike of $31, expiring on October 15th, providing a premium of $43. Palantir has been slow to move upwards, so, if it tanks, I will most likely close this position early once my 5% profit goal is hit and roll into another position. Moving to Draftkings, really hoping that space between the merger and this Evergrande scare affords some upward movement. Very far into the red with my leaps, so running as many covered calls as I can until I am able to make up for the loss, or yield a profit once my leaps is in profit again. For this move, I opened a $62 strike expiring October 29th, for a premium of $89. Like my move with Palantir, if Draftkings continues to tank, I will collect as much of the premium as I can, and roll into another position. Scoping bar charts again for highest implied volatility, I noticed some nice premiums being offered for CCXI. I went ahead and opened a cash covered call with a strike of $10, expiring on October 15th. There were much higher premiums being offered, but sticking with the 5% rule, the $141 premium is good enough. If the opportunity comes, I will bail early once 5% is reached, as I do not want to repeat another big or worse, support.com bag holding scenario. Next, I opened a cash-covered put with Foresight Autonomous with a strike of $2.50, expiring on November 19th, for a premium of $20. This stock has been as high as $7, and I wouldn't mind owning 100 shares if it goes any lower. I consider this company a long-time hold, so I am okay with committing $250 in collateral for a few months. Speaking of long-time holds, I increased my shares of Zomedica to 50 shares. I've heard a lot of great things about them in one of my first stock groups, in fact, the one that got me motivated to focus more on trading, and so this is also a long play. Now, moving to my straddles. My $8 call, and $8 put with BBIG actually yielded a profit of $22. This was a very close call and proved to be a potentially great new strategy to add to my trading arsenal. However, I definitely should have given it more time. Which is a perfect lead into my AMC put credit spread. Somehow, despite incredible fundamentals, the hedges were able to hold AMC neutral for the entire week. My strike of $43 was never hit, resulting in a loss of $100. I may do this again. But like BBIG, provide more time for the volatility to sit in. I think my mistake was doing this during the Evergrande FUD going around, but, you win some, you lose some. I had many chances to mitigate my loss, instead of incurring the full $100 loss that happened with AMC. So, as I have my goal of 5% gains per trade or position, I need to determine my stop loss. Last, moving into my leaps. As mentioned previously, my hope is that Draftkings is able to recover, as I will need it to hit over $61.75 for it to start going positive. Once that happens, unless it's an incredible change after these next 2 weeks, I'm out. My leaps with Palantir needs to hit $29.70 for it to turn profitable, but given the positive outlook and chatter about Palantir, I am optimistic and may hold until November, December. My AMC leaps is insurance in the event my revolving $51 cash covered call ever gets exercised. I'm still a firm believer in the mother of all short squeezes and want to at least have the option to recover the 100 shares of AMC I am offering to sell at $51 a share. Overall, in terms of collecting straight premium, I am up $1,319. I still need to factor in the loss that the Green Ridge and Support.com merger may have caused, But, I won't consider that a true loss until I've actually sold my 22 shares of Greenridge stock. I'm hopeful that it will even out in the long run, so I am not considering it a loss so much as currently a $2,500 opportunity cost, as that money is either a leaps or wheel opportunity I do not have access to just yet. But we will see how this plays out.